welcome to Business 360. I'm Archana Solanki and here are the headlines we're tracking this hour. Market closes at the day's high with sensex and nifty gaining over 0.5% each. A surge in HDFC Group stock sends bank nifty over 1% higher. Stock exchanges rescheduled the Eid holiday to Thursday, the 29th of June. The Nifty June series will now expire a day earlier on Wednesday. The biggest transaction in India's corporate history will become reality in 3 days. The merger of HDFC and HDFC-Bank will become effective from the 1st of July. HDFC chairman Deepak Parekh says the board meeting on the 30th of June to approve the merger will be its last. Adds he expects the HDFC stock to delist on the 13th of July and the merged HDFC-Bank stock to start trading by the 17th. India's current account deficit for the January to March quarter disappoints, comes in at 0.2% of GDP versus market estimates of a current account surplus of 0.5%. Services export surplus comes in lower than estimated. Full year current account deficit also comes in higher than expected at 2%. The market had estimated a deficit of 1.8%. Rohit Jawa takes charge as Managing Director and CEO of Hindustan Unilever after Sanjeev Mehta's retirement. A veteran at HUL, Jawa has a tough job at hand navigating challenges like weak demand conditions, rising competition. Stakeholders raise concerns over the current discourse of the proposed digital competition bill. 58 organizations and individuals urge the government to hold an open, consultative public engagement process while drafting the bill. Urge them to get smaller stakeholders on board for more transparency. SEBI approves Tata Technologies IPO, the first public issue from the Tata Group after nearly 2 decades. It's an offer for sale where shareholders will offload up to 23.6% of paid-up share capital. Heavy rainfall expected across several parts of the country. Flood situation in Assam improves, but over 1.5 lakhs still affected. Over 300 roads blocked in Himachal. The Char Dham Yatra in Uttarakhand has been halted. Prime Minister Narendra Modi speaks on the importance of the Uniform Civil Code, questions how a country can have different laws for different people while addressing party workers in poll-bound Madhya Pradesh. The Law Commission had recently solicited views and ideas on the issue. Fixtures for the upcoming Cricket World Cup announced. The event kickstarts on the 5th of October. Hosts India will begin their campaign against Australia on the 8th and face Pakistan on the 15th. Both matches will be played at Ahmedabad's Narendra Modi Stadium. The Reserve Bank has just released the current account deficit data. Let's go across to my colleague Lata Venkatesh for more. Lata.
Well, actually, it is a current account deficit which is negligible at 0.2%. But why are we cribbing? We are cribbing because the Jan, Feb, March months were expected to be a current account surplus. We had done exceptionally well in services exports. Even if software was declining, non-software services exports were expected to do very well. And my calculation was that we would do a services surplus of 44.7 billion. It's not mine. It's something we get every month and we put it together. So every economist under the sun had a services exports of 44.7 billion. But today we discover that the number was actually 40.2 billion. So it was 4 billion less than what we thought. The goods trade deficit was expected to come in at 55 billion almost, and that's come in a little lower at 52. But since the services surplus is much lower, the expectation that we would get a current account surplus has been disappointed, and we have got a minor current account deficit. So even for the full year, it works that way. You know, the FY23 full year has come in at a 2% current account deficit, whereas our poll of just about 3 or 4 economists said that it would be 1.8. Everyone was expecting a sub 2%. Now, while I express this disappointment, let me accept that when we started this year, you must remember, crude was in three digits post the war. The FY23 crude budget deficit itself, a crude deficit itself was expected to be very high, and everybody was gunning for a 3% current account deficit or even a 4% current account deficit. We should not be expressing disappointment at 2%. It's fallen substantially. It was just that we expected it to fall further. So no taking away from the fact that compared to the earlier part of the year when everyone was dreading a 3.5% current account deficit as a percentage of GDP. 2% current account deficit as a percentage of GDP is a welcome number. It's higher than last FY22, but that is to be expected. FY22, there was hardly any trade and we consumed much less crude. But the disappointment comes from the fact that one had expected better. The other numbers are not much to speak about. The remittances from Indians living abroad and sending money here, what you call private transfers, was as high as 28 billion in the October, November, December quarter. It's fallen to 25 billion in the Jan, Feb, March quarter. So maybe minor disappointment, but overall for the full year, Indians living abroad have remitted $100 billion. To be precise, $101 billion. So that's quite a record. And that will, of course, bridge any current account deficit in the coming year as well. But all I want to say is that it's kind of peaked off. The remittances from Q3 to Q4 have peaked off, and the current account expected surplus did not materialize. To that extent, there are some minimal disappointments in this fourth quarter numbers. But let me defer to the expert. Joining me now is Indranil Pan, the chief economist at Yes Bank. Thank you very much, Indranil, for joining us. Are you as disappointed as I'm making it out to be?
Well, not really, in the sense that I think if I look at my own estimates, I think the only reason why we were a marginal surplus was because we were looking at a relatively lower negative on the investment income, because the expectation was that the global rates were sort of hardening at a much faster rate than the domestic rates, and that could be a little bit of a benefit for the investment income. For the rest of the data, nothing much to sort of complain about, and I think that's the only miss that has happened in terms of turning our own surplus number into a deficit.
Okay. Well, if you looked at the services numbers, software plus business services, that has come in as a bit of a disappointment, isn't it? The monthly number that the ministry releases, the Commerce Ministry releases, the 3-month total that I got was almost 45 billion. Services surplus, 44.76 billion to be precise. Today, if I add the software plus business services, you get a slightly lower number of about 40 billion. So services exports good, but not as good as we thought. It was not a disappointment for you?
Well, to put it in context, I think to a certain extent we were, anyways, I'm not really commenting on the miss between the actual monthly numbers and what we get in the fourth quarter number. But contextually, I think going forward, we actually are to a certain extent seeing services receipts coming down to a certain extent.
Okay.
And that to a certain extent may actually be a concern when we are talking about just about a 1.1% or a 1% negative on the current account deficit for the next year. Because my belief is that most of the estimates that we get in the market has been factoring in very robust services numbers.
Yes.
Obviously, the transfers is another number which has seen a dimensional change from what we had seen in the previous year. But services numbers specifically, and more importantly, the software services,
yes,
to a certain extent, we might actually see a tapering off of the receipts of the software services, given the expected slowdown, if not a recessionary trend in the global economy, especially in the second half of the financial year.
Yeah.
So yes, that's a concern. And obviously the miss that you talked about dragged the current account numbers relatively on to the lower side.
I take your point. The services surplus already for the month of May has come in at just 25 billion, whereas in the previous, Jan, Feb, March, April, it was well over 30. It was almost 30 billion. So to that extent, the services surplus in May has also been a disappointment. As you say, that could be because of software services. What is your sense? Will the market react to this number at all, that it has come in marginally lower than what we were prepared for?
Not really in the sense, because this is mostly a backward number. The March is already over and most of the flows have been settled. So if you are really implying any implication of this on the currency markets. I would not guess any impact of this on the currency markets tomorrow. The currency markets, obviously, in India are looking at two very important things. One is how the global currency markets are behaving, and we have seen some amount of steadiness in terms of the global currency markets as of now, on the belief of the monetary policy actions that the global major economies are likely to undertake. The second, of course, is the expectation from the economists and also the trend showing that the current account gap or the current account deficit is likely to go back to the number of the just the previous year, which was also about a 1.2%. And the belief that the current account gap will be low enough and the capital account will actually bridge it in a very significant way. And hence people are building on a positive balance of payments number, and hence the steadiness of the currency. Going forward, I think the critical issues would be, and in my opinion, I think in the current financial, the risks are more lying on the capital flows rather than the current account. The current account has been the critical risk in most of the other years when commodity prices and especially oil showed a shock on the higher side. My belief is that most of the commodity space, including oil, may have found its bottom, even though we tend to talk about slowdown in China and slowdown in some of the major economies of the world.
I got it, Indranil.
I
got it, Indranil. Just to summarize what you said, every year we actually bemoan current account deficit and say that balance of payments, because we get very good capital flows, we are happy. But in the current year, the current account is going to be a source of pleasure, source of balance, and the BOP may disappoint. The capital flows may disappoint is what you're saying. Actually, speaking about capital flows disappointment, even in Jan, Feb, March, the data we have got, FDI flows, foreign direct investment, which is a capital flow, has come in at only 6.4 billion compared to 13.8 billion. I mean, less than half compared to year-ago levels. So FDI is becoming a disappointment, would you say?
Yeah, absolutely. Even if you look at the full year number, the FDI that we had got was about 28 billion. And we were getting used to a 38 to 40 billion over the last 3 years in terms of the yearly number. And hence a 10 billion drop is quite a significant amount to look at. There is still haziness in terms of the FIIs and how the FII inflows would pan out over the year, given risk aversion being a likely event in the second half of the year. The third concern, of course, is the ECB. Yes, we might not see the significant amount of outflows that had happened in the previous year because of a lot of repayments that were happening. But the delta in terms of the positive side may also be quite limited for FY24, given that global interest rates are relatively on the higher side compared to the domestic loan rate. So that is another sort of source of worry. The only positive thing in the whole story on the capital account is the banking capital, where we probably see a bit of an uptake that is also there in terms of the NRI deposits, and that to a certain extent may actually continue and provide a bit of a breather to the capital account. But most of the other entities, especially in terms of the investment flows, could be a worry. Not only because of a relative slowdown happening in the world over, including India, where we are looking at a 7.2% becoming, say, about a 6.5% or maybe even lower. But overall, I think the challenge therefore comes from the investment income, also because central banks are withdrawing liquidity in the rest of the world.
Yeah, got that. Thank you very much, Indranil Pan, for an exhaustive, comprehensive analysis. Just to repeat the short point, the market was bracing for a current account surplus. We don't normally report a current account surplus. Our imports are normally higher than our exports. But because the services exports did so well, the expectation was a minor current account surplus for the Jan-Feb-March quarter. It's come in at a minor deficit, 0.2, a minus 0.2 deficit. We were expecting a plus 0.5 on the current account. That's the only difference. as well, for the full year, there is accordingly a disappointment. The expectation was it will be minus 1.8% of GDP. It's come in at 2% of GDP, minus 2%. So that's a minor disappointment. As Indranil points out, FDI is becoming a disappointment, much less than the year-ago levels, Jan, Feb, March. But that is to be expected. We did see a lot of foreign capital flowing into startups in the year before, FY22. Some of it dried up in the last year. And it's possible that risk aversion will keep that money away in the current year as well. But for the current year, current account is not an issue. The expectation is that we will do something like 1.2%. I mean, from 2% current account deficit for FY23, we may actually do just about 1.2 in the current year because our exports are expected to do well. And crude has remained largely well behaved at around $70. So that's it. Positive news, but could have been a little more positive, is the summary on the current account. Back to you, Archana.
Right, thank you, Lata, for that. On that note, it's time for a short break. But coming up next, we'll tell you about India's biggest transaction in its corporate history. This is about the HDFC merger. More details when we return. Stay tuned. Welcome back. You're watching Business 360, and here's a quick wrap of the action on the last street. Nifty, Sensex and the mid-cap index each closed over 0.5% higher after trading in the green for the better part of the day. Nifty Bank closed over 1% higher, with gains being driven largely by a sharp uptick in the shares of HDFC and HDFCBank. The biggest transaction in India's corporate history will become a reality in 3 days. The merger between HDFC and HDFCBank will be effective from the 1st of July. Shares of HDFC are expected to stop trading on the 13th of July, and shares of the merged entity should begin trading from the 17th. HDFC chairman Deepak Parekh said both boards will meet on the 30th of December to clear and approve the merger. This will be HDFC's last board meeting. Parekh also said that employees of both entities will not be affected adversely by the merger.
Assurances we've got from the bank and from the CEO downwards, each and every employee under the age of 60 will be absorbed. Salaries will not be reduced, and they would continue to do mortgage loans because we need them.
So the bank does everything other than housing, and HDFC only does housing. And therefore the commonality of roles is very limited. It's limited to certain corporate functions. So that makes the process of integration a lot simpler than what you would see in a merger of even two small entities. Forget about two large entities. Because there you have commonality of products. If you have two banks merging, both banks have car loans, both banks have consumer loans, both banks have housing loans, both banks have, different, which is not the case here. So the integration will be easy.
In an interim relief to IIFL Securities, the Securities Appellate Tribunal has stayed market regulator SEBI's order against the company. SEBI has passed an order and debarred IIFL Securities from onboarding new clients for 2 years. The market regulator cited the breach of Code of Conduct regulations as its reason. Tata Motors subsidiary Tata Technologies has received approval from market regulator SEBI to raise funds through an initial public offering. The IPO is purely an offer for sale where the company will sell up to 23.6% of its paid-up share capital. Rohit Jawa has taken charge as Managing Director and CEO of Hindustan Unilever. This after Sanjeev Mehta retired from the role, ending his 10-year tenure. Jawa had joined Hindustan Unilever as a trainee in 1988. He was previously Unilever's Chief of Transformation. In his new role, the 56-year-old has a tough job at hand of navigating challenges like weak demand conditions, rising competition. 58 organizations and individuals have raised concerns about the impact of the proposed digital competition bill. The stakeholders have urged the government to hold an open consultative public engagement process while drafting the bill. The government has also been urged to get smaller stakeholders on board for more transparency. Shivani Bajaj gets us more.
Well, yes, a total of 58 organizations and individuals representing different stakeholders from across the country have written to the Secretary of Ministry of Corporate Affairs over their exclusion from the consultations on the Digital Competition Bill. The stakeholders have urged the MCA to hold an open consultative public engagement process while drafting the Digital Competition Bill. The organizations that have sent the letter include the Cyber Cafe Association of India, Internet Society Chapters of India, India Internet Foundation, and Consumer Unity and Trust Society, and many others. The stakeholders have asked the MCA to take into consideration the concerns around the impact of the upcoming bill on end consumers and small businesses which rely heavily on ICT tools. Remember that the MCA had formulated the Committee on Digital Competition Law CDCL in February this year, which is working on the contours of the upcoming law in India. Industry experts suggest that the law is likely to benefit Indian small businesses and startups by providing them a level playing field with tech giants. However, many stakeholders that are signatories of this letter have said that the committee should take into account the impact of such a law on end consumers and smaller players and CSOs. The stakeholders have also said that they are concerned that the proposed digital competition bill would impact a wide range of subjects such as digital inclusivity, user experience, data protection, security, and cost of doing digital business for MSMEs, and added that currently the discourse around the upcoming bill is informed only by a few stakeholders, even though the proposed law directly or indirectly affects a much wider range of stakeholders.
Right, thank you, Shivani, for that. With that, it's a wrap on this edition of Business 360. Thank you for watching. Stay tuned to CNBC TV 18. The news continues on the other side.